Important considerations to remember in the real estate market. If you have something you really want to be sure to keep it. When it comes to real estate, you want to invest in the right kind of protection and have insurance on your property and all things inside of it. This will allow you to keep your valuables or give you the capacity to replace them should something happen. Asset protection is one of the best ways to protect your property. What is asset protection? Asset protection. What is it and how does it protect you? This plan was developed to protect a piece of real estate as well as all property inside the property. If financial catastrophe strikes, asset protection will replace items and ensure that the property's value doesn't disappear. If asset protection is all you want, you need to consider all the options, either investigating matters on your own or talking to a lawyer. An inquiry is carried out to determine how much money and values can be protected based on the area. Once assessments are carried out, you'll be provided an estimate of how much you'll get in protection and the programs designed for you. State law will dictate how much asset protection will be given after the analysis is done. Disability and retirement benefits are typically not included in asset protection. Personal items such as clothing, furniture, jewelry, etc. may not be added as well. Some states, however, cover some assets up to a certain amount rather than full coverage. A real estate investment doesn't need to only be about finding the perfect loan. It's also about looking at the assets and coming up with ways to protect them. With protection for what you own, you can keep the assets you love. Why your credit score is so important to investing. It doesn't matter if you're trying to buy your first home or your 20th. Your credit score plays a huge role in your investment. Your credit score will determine how much money you can be approved for. By knowing what your credit score is before seeking out a loan, you know how it will affect your overall investment. Use those points to get the best deal possible. Before applying for a loan, you need to check your credit score out. Will your score allow you even to get a loan? There are 3 primary companies that rate your credit: Experian, Equifax, and TransUnion. These agencies lay out your present credit status as well as your history credit status. If your credit is good, no late payments, and diverse credit portfolio, your score will be high. Bear in mind that your Fair Isaac Corporation score will range from 300 to 850. Category and range. Excellent, 750 and higher. Good, 700 to 749. Fair, 650 to 699. Poor, 550 to 649. Bad, 549 and less. Your credit score can affect your ability to get a loan. The higher your credit score, the higher your chances the lenders will want to work with you. Not only can they give you a good rate on the loan itself, but they may even give you the amount of money you need to purchase a property. What does the Fair Isaac Corporation, also known as FICO, score take into consideration? There are 5 factors the Fair Isaac Corporation score looks at. Payment history, 30%. Lenders are going to look at your payment history. Do you pay your accounts in a timely manner? Your Fair Isaac Corporation score is largely affected by the payment history on your account. Amounts owed, 25%. Just because you have a high credit account and owe money on them doesn't make you a high-risk borrower. How much you owe on those accounts plays into your credit score. The higher your account balances are, the riskier lenders see you. Age of credit history, 15%. The longer your credit history has been established, the higher your Fair Isaac Corporation score will be. Even if your credit report doesn't show a long credit age, how the rest of your credit report looks, balances owed, and repayment statuses will determine how high or low your Fair Isaac Corporation score is. Credit mix, 10%. Your Fair Isaac Corporation score will look at your accounts. How diversified is your portfolio? Do you have installment accounts, credit cards, finance company accounts, retail accounts, student loans, auto loans, or mortgage loans? The diversity of the portfolio may not play a huge role in the score, but it does have a role. New credit, 10%. According to research, opening multiple accounts at one time shows lenders that you're a risky borrower. This is especially true if you don't have an established credit history. It's important to note that your credit report will not show any of the following: income, employment status, race, bank accounts, marital status, political affiliation, religion, gender, criminal record, medical history, interest rates paying, reward accounts, utility accounts unless you've defaulted, payday loans, public records, and accounts. A good credit score means you pay your balances on time, you've maintained a good history, and had very little overdue payments. Some lenders will only look at this for borrowing considerations. Other lenders may consider financial stability, job status, and income. Before you start your real estate investment adventure, you need to ensure your credit rating is in good shape. By knowing the factors that affect your credit score, you can save yourself a lot of time and money in the long run. Make sure your credit score is in a place where lenders beg for your business, as this will help establish your credibility.